Open your banking app right now, not later, not after this video. Right now, while I'm talking, pull it up and scroll to the last 30 days of transactions. I want you to actually do this because I already know what you're going to find. There's going to be at least one charge on there you don't fully recognize. A name that sounds vaguely familiar, but you can't quite place. Maybe it's $8, maybe it's $40. It's small enough that you've never bothered to investigate it, and that's exactly the point. The average household wastes $200, $300 monthly on forgotten subscriptions because companies make signing up effortless and canceling intentionally difficult. So today, we're going through 10 monthly bills that you should seriously consider canceling. Not eventually, not when I get around to it, but this week. While the idea is fresh in your head and before the momentum of ordinary life buries it again. For each one, I'm going to tell you why it exists, why it survives longer than it should, and exactly what to do about it. Keep your phone nearby because by the end of this, you may want to cancel a few of these in real time. Let's get into it. Bill number 1, streaming subscriptions. You forgot. You had. We'll start with the most common one because it's almost universal at this point. The average household now pays for 4 or more streaming platforms at the same time. Video, music, sometimes multiple video services stacked on top of each other. And when researchers actually ask people how many of those services they meaningfully use, the honest answer usually comes back to somewhere around 2. Think about what that means. If you're paying for 4 streaming platforms and only using 2, you are, in effect, funding 2 services you don't watch. Not because you decided that was worth it, but because you never decided at all. It made itself by default the moment the free trial ended and nobody told you. This is where I want you to actually stop and check. On an iPhone, go to Settings, tap your name at the top, then tap Subscriptions. On Android, open the Play Store, tap your profile icon, then go to Payments and Subscriptions. This single screen will show you every recurring charge tied to your phone's App Store account, and for most people, this is where the first surprise lives. A trial that quietly converted into a paid plan. A kids' show subscription from 3 years ago that nobody in the house has opened since. A music service you signed up for during a free month and never revisited. Here's the simple rule. If you haven't opened an app or used a service in the last 30 days, cancel it. Not pause it, not downgrade it. Cancel it outright. If it turns out you genuinely miss it, resubscribing takes about 90 seconds. But most people who do this exercise honestly find that they don't miss it at all, because the truth is, they'd already stopped using it long before they stopped paying for it. Bill number 2, gym memberships. You're not using. This one tends to sting a little, so let's be honest about it together rather than judgmental. Gyms, as an industry, have built their business model around a very specific and well-documented pattern. They sign up far more members than their facility could physically hold if everyone showed up at once, because they know most people won't. This isn't a conspiracy theory. It's publicly discussed within the fitness industry itself. The profit isn't primarily built on people who use the gym constantly. It's built on people who pay consistently and attend rarely. If you haven't set foot in your gym in the last 30 days, this isn't a referendum on your willpower or your character. It's simply a mismatch between a monthly commitment and your actual life right now. Gym memberships typically run somewhere between $40 and $80 a month. And if that's paying for a locker room and some equipment you're not using, it's worth being honest about it. Canceling doesn't mean giving up on fitness. It means removing a monthly bill that isn't currently earning its place in your budget. If, and when you're ready to get back into a routine, there are now plenty of pay-per-visit options, day passes, and low-cost fitness apps that let you exercise without a long-term financial commitment hanging over you, whether you show up or not. And if you do use your gym regularly, and it's genuinely part of your life, keep it. This list isn't about cutting everything. It's about cutting the things that have quietly stopped serving you. Bill number 3, cable TV stacked on top of streaming. This is one of the clearest examples of duplicate spending that exists in a typical household budget. If you're paying for cable television and also paying for Netflix and also Hulu and also Disney Plus and also whatever else has crept into your monthly lineup, you are in many cases paying twice for access to the same category of content. Traditional cable packages routinely run somewhere between $80 and $150 a month once you account for equipment fees, regional sports surcharges, and bundled add-ons that got tacked on somewhere along the way. Compare that to the total cost of a handful of streaming services, and the gap becomes obvious. Before you cancel outright, there's a useful negotiating step worth trying first. Call your provider and specifically ask to be transferred to the retention department, not general customer service. Retention departments exist for exactly one purpose: to offer discounted rates to customers who are about to leave. It is common for them to have offers 30 to 50% below your current rate that were simply never presented to you up front. Because why would they volunteer a discount if you weren't asking to leave? If even the discounted rate isn't worth it, once you weigh it against what you're already paying for streaming, then it's time to cut the cord entirely. For the vast majority of households, once the transition is made, they realize they didn't lose access to anything they actually watched. Bill number 4, physical media and mail subscriptions. This category is easy to overlook because it doesn't live inside your phone. It lives in your mailbox, and things in your mailbox have a way of becoming invisible. Magazines you subscribed to years ago and stopped reading. A newspaper subscription in print form when you actually read the news on your phone. Book of the month or box subscription services that seemed exciting for the first 2 months and then became clutter. These subscriptions tend to auto-renew annually, which is precisely why they're so easy to lose track of. You only get billed once a year, so there's no monthly reminder nagging at your memory. The fix here is specific. Pull up your credit card statement and filter or search for anything billed annually rather than monthly. Annual charges are the ones people forget fastest because a single yearly hit doesn't register the same way a recurring monthly line item does. Go through the last 12 months of statements if you can, and you'll likely find at least 1 or 2 of these hiding in plain sight. Bill number 5, extended warranties. This next one tends to generate some pushback, so let's walk through the actual math rather than just asserting it. Extended warranties are, by a wide margin, one of the most profitable products that retailers and manufacturers sell. Electronic stores, appliance retailers, and car dealerships all lean heavily on extended warranty attachment rates, and the reason is straightforward. The profit margin on the warranty itself is often far higher than the margin on the product it's attached to. That tells you something important about who the product is really designed to benefit. Here's the underlying pattern that makes this math work against the consumer. Most electronics and appliances that are going to fail tend to fail either very early, while they're still covered under the manufacturer's standard warranty, or many years down the line, often well outside the extended warranty's coverage window entirely. The extended warranty period frequently covers the years in between, which statistically tend to be the most reliable stretch of a product's life. This doesn't mean every extended warranty is worthless in every situation. For certain expensive, complex items, some people do find value in the peace of mind, but it's worth going through what you're currently paying for, whether that's on a phone, a car, a refrigerator, or a laptop, and honestly asking whether you'd have come out ahead simply setting that same monthly amount aside yourself, untouched, as a self-managed repair fund. Bill number 6, bank account fees, monthly maintenance fees, ATM fees for using machines outside your network, overdraft fees, minimum balance penalties. Individually, these might look small, but stacked together, they can easily run $10 to $35 a month, sometimes more. And here's the part most people don't realize. A large share of these fees are negotiable or outright waivable, and banks are often required to disclose the conditions under which they can be removed. Many checking accounts waive their monthly fee automatically if you set up direct deposit, or if you maintain a minimum balance, or if you're enrolled in paperless statements. The catch is that banks rarely go out of their way to tell you this. It's on you to ask. So call your bank and ask a direct, simple question. Is there a way to waive this monthly fee? You'll often be surprised at how quickly the answer is yes. And if the answer is genuinely no, no matter what you're paying is unavoidable, that itself is useful information. Because it means it's worth comparing your current bank against the growing number of online-only banks that offer checking and savings accounts with 0 monthly fees as a standard feature, not a special favor. Bill number 7, small, forgettable app. Subscriptions. This category doesn't get much attention because each individual charge is genuinely tiny. $5 here, $8 there, $12 somewhere else. Meditation apps, photo editing tools, fitness tracking apps, productivity and planning apps downloaded during a burst of motivation, often in January, and never opened again once that motivation faded. The reason these survive so long isn't that people value them. It's that they're too small to trigger scrutiny. A $200 charge gets noticed immediately. A $7 charge blends into the noise of a bank statement and simply gets ignored month after month, year after year. But run the math with me for a second. 10 small app subscriptions at an average of $10 each is $100 a month, which puts it on par with some of the larger bills on this list, just broken into pieces, small, enough to avoid your attention. Go back to that subscription manager screen from bill number 1, and this time look specifically for anything under $15. That's usually where the real clutter lives. Bill number 8, a landline. You no longer need. If your household still pays for a traditional landline phone and everyone in the household also carries a cell phone, it's worth asking a very direct question. When was the last time that landline actually rang for something other than a robocall? For most people today, the honest answer is, I genuinely don't remember. Landlines can still run $20 to $40 a month, sometimes bundled in a way that makes it hard to isolate the exact cost, which is another reason it tends to survive unnoticed inside a combined phone internet cable bundle. This one is largely nostalgic at this point for the majority of households. If there's a specific reason you're keeping it, a home security system tied to it, a rural area with unreliable cell coverage, an elderly family member who's used to it, that's a legitimate reason to keep it. But if it's simply been there since before smartphones existed and nobody's ever revisited the decision, it's worth revisiting now. Bill number 9, add-on tiers and premium bundles. Beyond your base cable, streaming, or phone plan, there's often a whole second layer of charges sitting quietly on top. Premium sports tiers, movie channel bundles, DVR storage upgrades, extra data add-ons, premium customer support tiers. These tend to get added one at a time, often during a promotional phone call where a representative offers just one more thing at what sounds like a small additional cost, and they seldom get removed with the same ease they were added. The fix here requires a bit of patience. Pull up your itemized bill, not the total, the itemized breakdown, and go through it, line E by line. Every single add-on represents a decision that was made for you or by you at some point in the past, often under different circumstances than the ones you're in today. Ask yourself, for each line, whether it's still a decision you'd make if you were starting from scratch right now. If the honest answer is no, that's your cue to call and remove it. Bill number 10, a financial advisor, charging high fees for underperformance. This last one is a bigger, more nuanced topic than the others, but it belongs on this list because the dollar amounts involved are often larger than everything else combined. If you're paying a financial advisor an annual fee of 1% or more of your total assets under management, and your portfolio isn't meaningfully outperforming a simple, low-cost index fund over a comparable period, you are paying a premium price for a result you could largely replicate yourself at a fraction of the cost. To be clear, this isn't a blanket statement that all financial advisors are unnecessary. Some people genuinely benefit from hands-on guidance, particularly around complex tax situations, estate planning, or simply having the discipline of a professional relationship, keeping them from making emotional decisions during market downturns. That value is real for some people, and this isn't a suggestion to abandon it if it's working for you, but it is worth asking your advisor directly, in plain language, exactly what you're paying in total fees each year. Not just the headline percentage, but any fund expense ratios layered on top of it, and then comparing that total cost against what a simple, broadly diversified, low-cost index fund would have returned over the same stretch of time. If the numbers don't justify the fee, that's a conversation worth having, either with your current advisor about restructuring the arrangement or about managing more of it yourself going forward. Most unnecessary bills seem too small to matter on their own, a forgotten app, an unused gym membership, or a streaming service nobody watches. But together, they quietly drain $150 or $300 every month. That's $1,800, $3,600 a year. And over a decade, those small charges can add up to tens of thousands of dollars that could have been invested or used for meaningful goals. The good news is that fixing this doesn't require earning more, working longer hours, or giving up things you genuinely enjoy. It simply requires about 30 minutes and a careful review of your bank statement. Go through the last 2 months of transactions, identify subscriptions you don't recognize, services you haven't used in weeks, and recurring charges you've been paying out of habit. Then start canceling them one at a time. This approach works better than traditional budgeting because it doesn't rely on constant willpower. Most budgeting advice asks you to make better spending decisions every day. Canceling recurring bills is different. It's a one-time action that keeps saving you money automatically every month without any further effort. Start with just one cancellation today. Once you see the savings, momentum builds naturally. Small decisions made once can create lasting financial freedom without changing your lifestyle.